Trish, despite the carnage on the stock markets overnight, Asian currencies, they seem to have rebounded this morning. What's the story there?
Yeah, Hans, I checked around with all the banks and everyone's like rather confused as to why the currencies have actually recovered, after the carnage we saw in the stock markets overnight. We're seeing the Australian and the Kiwi dollar stronger this morning. We're seeing all the Asian currencies actually trading off their lows, all stronger against the dollar. Markets like I've spoken to all the quite a few of the major trading banks, and they're all citing very vague reasons like the sell-off was too excessive, it was position adjustment. And then they're thinking at some levels, especially in the crosses against the yen, there are levels for bargain hunting. So it just goes to show that there's a lot more push and pull now between greed and fear, between risk aversion and risk appetite. Although markets seems to be latching on to the fact that the risk aversion is still very much the theme. Seems that traders are not so convinced that this could be the case given the kind of response we're seeing in the markets at the moment. Traders are saying that there's very little on the data as well to chew on for the next couple of days, so they'll be focusing very strongly on the stock market, and it seems that the stock market seems to be holding up quite surprisingly well this morning. So it just goes to show the kind of the confusion and the perplexity that's in the markets right now. Has?
Hey, Trish, let's stop the head scratching. Let's bring in our guest this morning, Olivier Debar. He's an economist at Credit Suisse. He joins us here in Singapore. So what's happening? Why that reaction from Asian currencies?
Well, I'm not surprised there's a lot of head scratching, and I don't think there's really sort of one key explanation. I think the fact that we had better than expected U.S. numbers out yesterday, I'm referring to the U.S. Empire State number, I think that provided a bit of a sort of counterweight to the very poor data we had out of the U.S. on Friday. So I think the market in Asia has woken up this morning, is looking at a slightly better number. And perhaps, as you said, or your colleague was saying, there was a very, very big move yesterday. That's been slightly reversed. Some of the positions have been cleared. But I still think we're in this kind of risk-on, risk-off environment where the market's going to be focusing very closely on individual data points.
Trish?
Olivia, how do you expect to play out this risk aversion theme then? If you seem to be, I get that you are inclined towards that, right? There's going to be more a risk taken off the table. So if that's the case, how do you intend to play this out as far as the Asian currencies are concerned?
I think really the way we're looking at the moment is we're a bit of a crossroads. We've always said that during the summer and up until early autumn, we would have this drive in global industrial output higher. And that would be driven, if you want, by an inventory rebuild. And I think that story, to a large extent, is panning out as we had expected and others were expecting. But the million-dollar question for, I guess, the later part of the year had always been, what happens when that inventory rebuild is done and dusted? What's going to be driving economic growth? Ultimately, it needs to be consumer demand, but the question is consumer demand going to be strong enough? And when you look at some of the employment and wage numbers globally, the jury is very much out on that particular issue. So I think we're at a stage now where we know that global IP has recovered. That's a positive. It's been partly priced into some of the rallies we've seen in currencies like the Korean won or the Aussie dollar throughout June and July. But now the market's saying, well, that's very good, but what happens next? Is consumer demand going to take over? And I think the market is a little bit nervous that it won't, and that's one of the reasons why we've seen risk being taken off the table and currencies such as the Aussie dollar and some of the Asians coming off. So I think the way we would like to think about it is that, look, we've still got probably a couple of months of good IP numbers, so I think that'll provide some kind of backstop to risk. And then you really have to look at individual countries and currencies and say, well, who has the strong global IP story? Who has the strong demand story? That's going to be absolutely key for the next 3 months. And as a result, which central banks are going to be reacting more hawkishly? So I think there are going to be some good relative value trades within the G10 and within the Asian universe.
Well, if that's the case, do you see the current levels now as a bargain hunting level to go back in? Maybe, like you say, you talked about the good IP numbers, perhaps the Australian or the Kiwi dollar, or perhaps the Indonesian rupee and the Korean won, since these are currencies which is supposedly be able to latch on to the global growth story?
I'm not necessarily sure I would batch together the Aussie Kiwi dollar along with the Asian currencies. Our own fair value models showed that the Aussie dollar and Kiwi dollar are probably still slightly expensive on fair value. Having said that, if you look at the Korean won, Taiwan dollar, Indonesian rupiah, these currencies are still very cheap to fair value. So I think if you're looking at this from a medium-term perspective, I think there is value in these currencies, particularly as in countries like Korea, there's been a very sharp turnaround both in industrial output and in export growth. And I think that's going to lead to this continued improvement in current account balances, and I think will ultimately mean that policy will have to be tight in these economies. So from a medium-term perspective, yes, I think you can see value in currencies like the Korean won.